Welcome back. Are we now entering the Trump Pump 2.0 as we are now entering Q2 of 2025? There is a lot happening in the markets. There's a lot happening in the regulatory space, in the betting markets, in the altcoin market. We're going to be talking about all of that today. We're going to be talking about MicroStrategy, Ethereum. We're going to be talking about Bitcoin, Poly Market, some betting going on with what's going to happen or not going to happen with crypto and Bitcoin. And we're going to really have a lot of in-depth discussion about where we are in this cycle and where we are going in this cycle, in my opinion and my analysis. As always, these are just opinions, so do your own research. We don't have to agree, but I'd appreciate if you give this video a free thumbs up. Also hit that subscribe button, that way you never miss a new video. If you want to help support the channel, click the join button down below to learn more about becoming a channel member, or you can leave a super chat in the comments. Thanks to all of our supporters. Bitcoin has now pushed up from a 200-day moving average, and Ethereum has added over 10% in the last 24 hours. And what is going on in the markets that show this potential recovery for not just Bitcoin, but Ethereum as well? Well, we know that, geoeconomic situations with the potential tariffs that are going to be either put into play or not put into play in the beginning of April, this is going to be a big factor for just the overall economy. And so what we've seen happening is massive outflows out of the Bitcoin ETFs. No purchases from MicroStrategy. No countries saying that they're going to be buying Bitcoin. The strategic Bitcoin reserve, not really a thing in the sense that many people thought that there was going to be actual Bitcoin buying going on just yet. So all of these things together can really kind of dampen the markets, right? Everybody was kind of just over speculating on what was going to happen with crypto this year. And the market kind of corrected everybody and put everybody back into their place and said, calm down, things are going to take time. Let's understand what really the fundamentals are. Because, I mean, guys, really think about it. In the last few months, the only real assets in the crypto ecosystem that pumped were meme coins. And I think a lot of the market kind of, and the big money, they were like, wait a minute. The same way that I say about the way that I'm analyzing Solana, that Solana in the last couple of years, the only thing they've been able to create effectively is meme coins, right? I mean, what else was driving their transaction usage and their wallets and network activity increase over the last few months? It's been meme coins. That's it. There's other stuff built on Solana, but that's not what was driving the activity. Now we're going to be talking about Solana versus Ethereum in a little bit later in the video, because there are, fundamental differences between the two chains, but also in where the prices are going. And so now what we're hearing is the White House is going to be potentially scaling back tariffs, softening their language, or just calming down kind of this whole tariff talk. And Bitcoin has gained on these potential economic jitters. Now, like I said, on one end, you have where the White House is potentially going to enact these tariffs, and this is causing a lot of uncertainty. But this may just be, as Trump says, the art of the deal, and kind of making a deal with these countries to, from my understanding, what they're trying to do is get enough tariffs or foreign taxed items where they can eliminate income taxes for people making $150,000 or less. But again, this has to go in line with balancing the budget with the Doge efforts, right? Department of Government Efficiency. And by the way, I don't really know Howard Lutnick. Obviously, we've heard from him previously on this channel because he is the founder and I think CEO of Cantor Fitzgerald, which is a major hedge fund in the United States. But the more I listen to him, the more what he's saying, this is just in my view, common sense stuff. And really who else is fighting for these things the way that basically it sounds like Howard Lutnick is. And this does not necessarily have to do with crypto, but what he has said previously is he is very pro crypto. His companies own Bitcoin. They own MicroStrategy. I think they own some altcoins as well. He is very bullish on this whole crypto ecosystem. And as I think he's the Secretary of Commerce, this is huge, right? Because this is one avenue. And think about what his company's doing and what they have been doing, even previous to him getting this role. in terms of, crypto investments, and not just investing in the coins themselves, but companies that are building on these ecosystems for products that they can then go and monetize and continue to grow and expand. These back-end integrations in traditional finance. We're seeing a lot of many, celebrity or well-known investors doing this across the board. Anyway, here he was talking about what's going on with the Social Security, and instead of like, this has to do with the debt as well, right? You always hear, oh, the politicians are just going to push the debt off to the next generation. And you're like, well, what exactly does that mean? Well, it's the same thing here, right? Social Security, effectively, the idea behind it is very good. I don't think that it's implemented right. And I think that the younger generations, basically like 50 and below, maybe even 40 and below, they believe that Social Security is a retirement plan, and it's not. It's like subsidized, income for elderly people or older people, but it's not supposed to replace your income completely. So let's say, for instance, you're making $50,000 a year at your job. When you retire, you may get 20,000 or 15,000. I don't know what the exact numbers are, but I know it's not. You're not going to be making 50,000. If you're making 100 or 150,000, it's probably going to be like $20,000 or $25,000 a year. Like, it's not that much. It's supposed to be there to subsidize. Now, the big issue is, it's it just probably because a lot of waste, fraud, and abuse, they just don't have enough money to keep everything running. So anyway, without getting into all the details of that, the issue is the pushing it onto the next generation. This is when they'll say, oh, well, to save on Social Security, we're going to move the age. When I was growing up, I think it was like 63 to retire. Then it turned to 65, then 67, and now they want to change it to 70. And that's, again, pushing the can down the road, making it, oh, well, you'll just have to get it later. You'll get it later because then they have to pay less. And people, historically have been living longer. And what Howard Lutnick says here, this is like, I feel like what we need, this kind of mindset that we're not going to make it more difficult for Americans because you can't balance the budget. You need to balance the budget. I mean, no business, guys. I run businesses. Many of you run businesses or work at businesses. You can't run a business in the red. I remember I was talking to somebody about a potential business investment, and they were basically like, I'm like, well, how much money do you have? Like, are you set to like, work at this business for a while and and not be profitable? He's like, well, I'll take a little bit of a salary. I'm like, no, 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 no. Like, if you're starting a business, you don't take a salary until you're making money. Like, it's not, you can't run a business in the red. And most businesses are in the red for the first year or two, unless you're buying an existing business. But even then, you could still be in the red depending on how that business was run. But just to, gain customers, gain market share, that takes a while. And so a lot of businesses don't run immediately in the green. Some do, but most don't. And so you have to be ready for that, right? And this person wanted investment, which basically means that I'm going to be paying them to run their own business. That doesn't make any sense. And I said that to them. And they're like, well, I don't work for free. I'm like, yeah, but you're the owner. You want me to invest. Like, why don't I just open my own business then? Why do I need you? I'll just open my own business and hire you for significantly less than this investment is, and will probably make more than this investment will make, just based on the fact that you don't understand this concept. And I'm not saying it in a bad way. This is just basic business. Anyway, let's listen to what Howard Lutnick says about like really just balancing the budget, getting things corrected so that we don't have to push it on to the next generation, so that people who are working very hard right now don't have to work longer just to get some of those benefits that they feel that they deserve. Anyway, let's listen in. And by the way, if you're up to this point in the video, don't forget to give the video a free thumbs up. We upload as much as possible to bring you the latest happening in the financial world. So also hit that subscribe button. That way you never miss a new video. Anyway, back to Howard Lutnick, the Commerce Secretary of the United States.
The key is stop sending money to the wrong place so we can make sure we can always defend sending money to the right place. I would never allow, if I can stand it, to not pay somebody who retired at 65 their benefits.
Yeah,
I
of
find
course.
it disgusting when we're the richest country in the world and some politician says, in order to save Social Security, rather than getting rid of the waste, fraud, and abuse, we should move it to 70.
Yeah.
How about no? How about we're rich enough to give people the benefit of the bargain
Yeah.
of being a great American? But let's put great people in charge.
That's really
I completely agree. And it really does come down to business, right? Because again, you can have five businesses in a relatively in the same market, right, that are competing for the same market share, and they're all run very differently. And the ones that will do the best are the ones that have a good product, the ones that are able to, manage their business and manage their finances and go into the green and understand how money works, right? That if you're hiring somebody, they need to be able to perform whatever the job is. And the customers, they have to be willing and excited to pay whatever the fee is. Like there's so running a business is very complex, and running the government effectively, this is a business. Especially when you're talking about Social Security, this is a business. And when I hear somebody like Howard Lutnick say this, this gives us kind of a little bit of a viewpoint into the mindset of the administration and how they're doing things. And so all the things that we see happening in crypto, specifically with Bitcoin, are very, very positive. And this stuff is happening very rapidly, and it's not necessarily affecting the price right now, but there's going to be a delay, and whatever that delay is, I don't know, maybe a month, maybe a week, maybe a year, I don't know, but the delay, once the really just the market participants realize what this means, I think that we're going to see the reversal, the major reversal to new all-time record highs, and many of the altcoins actually pumping, because most of the altcoins we haven't really seen do major pumps this cycle. And one of those facts that we are seeing in the major change already is the acting SEC chair rejects enforcement and demands real crypto rules. And as you guys know, the previous administration with Gary Gensler, it was just years and years of, well, what are the rules? Well, you know what the rules are. All you got to do is come and talk to us, and we'll make sure that you are, totally in compliance. And then boom, they get sued, right? That's what the SEC was doing. And the new SEC chair urged rulemaking over enforcement to clarify crypto regulations and avoid courtroom confusion. He led the inaugural session of the Crypto Task Force Roundtable in March. He used the occasion to urge the commission to move away from regulation through enforcement when dealing with crypto assets. Speaking to regulators, legal experts, and market participants, he argued that the SEC should instead embrace formal rulemaking process to bring clarity to the digital asset space. He said, quote, "This approach of using notice and comment rulemaking or explaining the Commission's thought process through releases rather than through enforcement action should have been considered for classifying crypto assets under federal securities laws." This is a much different tone than what we were seeing with the previous administration, like I said. And so this is a change. This is a change for the banks, it's a change for the SEC, it's a change for the market participants, the investors, companies. And so they believe that when MicroStrategy made their first purchase of Bitcoin, when MicroStrategy took out debt to make their first purchase of Bitcoin, believe me that there were definitely companies where their board of directors were having meetings that week, maybe that same day, about what their strategy needs to be. When the president signed crypto executive orders, there were definitely meetings in chair rooms of some of these organizations to discuss: are they going to do this? What do they need to do? How do they figure it out? Right? That may take a few months, where they send somebody to go to Michael Saylor's office to understand how to do it, get their lawyers and bankers and finance people involved, get them to come up with a plan, run it through the board, get it approved, then start implementing. This can take a lot of time. And again, like I've said before, I do have concerns about MicroStrategy and the risk there is there, because no other companies are doing what they're doing. Nothing close to what MicroStrategy is doing. And this is a huge, huge risk in my view, because it puts MicroStrategy at this kind of pinnacle of they're holding all the risk and hoping other companies do it as well. I mean, I don't think that they care whether companies do it or not, but at the end of the day, if companies don't start doing this, How is MicroStrategy going to perform over the long term? Well, we just heard again, MicroStrategy has acquired 6,911 Bitcoin for $584 million. They now hold over 500,000 Bitcoin, and their buy price is $66,608. Now, if you go to the MicroStrategy website, you click on Bitcoin, you can actually see all of the data on their Bitcoin purchases at Strategy. And you can see right here at the top, 506,000 Bitcoin, $66,000 average buy price. And, one of the things we saw last week was only 130 Bitcoin purchase, which is much lower than what we've normally seen where there are thousands and thousands of Bitcoin purchase. And this was significantly lower, 25% lower than their recent purchases of, $100,000 buy price. And so now we're starting to see the money flowing back in. We're starting to see MicroStrategy doing their thing again. But keep in mind, they're purchasing this through debt, right? So I don't know exactly how they purchased this, whether they either did it through this, their new product, which is a perpetual debt offering effectively, where they raised, I think, around $750 million last week, which is a good thing for the stock because that means that they're not selling the actual MSTR stock, which they can do and they have been doing. And this is also going to put some pressure on the price of the stock. I think they're also experimenting and kind of seeing what all of these things, what the impact is on the price of Bitcoin, on the price of MicroStrategy. Because again, look, they did it after a month of not doing any buys or a few weeks of not doing any buys. They did a tiny little purchase to kind of see how it affects the whole market. Because as you guys know, my view is that based on what MicroStrategy is doing, the Bitcoin ETFs may actually be doing the complete opposite. And so what we've seen recently is no purchases for MicroStrategy, and now the ETF started buying back in. Look what they did a few weeks ago. About a week or two ago, they were selling 500, 600, basically 900, $1.2 billion of Bitcoin in 1 week, $1.2 billion. And they were doing it in very large tranches. This week, they started purchasing that Bitcoin back, but they've been doing it in much smaller tranches. This is very in line with my thesis that the tranches that they are going to do are going to affect the price to the upside, because when they're selling, they're basically selling into the liquidity for Bitcoin buying occurring from institutions or MicroStrategy, which we don't really dig that deep into the Bitcoin flows on this channel, but you can see the Bitcoin flows and where the money is coming from and how much actual money is flowing into Bitcoin. And when you see those numbers really increasing, the liquidity needs to come from somewhere. Who's selling the Bitcoin? Well, I believe that during recent MicroStrategy purchases, the selling was being done by the ETFs, and now we're seeing the opposite occurring. Buying happening in the ETFs, MicroStrategy making larger purchases at this point, right? Still not kind of in their, I mean, how much was it? They bought $584 million, right? So basically, their whole raise that they just did last week, they put right into Bitcoin. And so, what happened to the price of Bitcoin? It's gone up after we heard about this price, and while the price, probably while they were buying, the price was increasing. And so, again, watch what happens this week when we update this, and we see more Bitcoin ETF purchases. Now, if the Bitcoin ETFs dump, that doesn't necessarily mean the price is going down. It just confirms the theory and the thesis that as MicroStrategy is buying, they're buying the liquidity of the ETFs. And then the ETFs will buy back in smaller tranches, because this will have less of an effect on the market. If they were to put all $1.2 billion back in the market in 1 week, just like they took it out in 1 week, it would definitely have a price upside effect, I believe, because they were the liquidity the week before. Now, who's the liquidity when they're buying it back, right? And MicroStrategy already wiped the market with them. So we'll see about that, and I will definitely keep you guys up to date in the future on kind of where that stands. But we're seeing a lot of money flowing in, like I just said. The money is flowing in, and as the money's flowing in, you don't see immediate changes in the market, right? Because we don't just see money directly going into crypto, but we see it going into crypto infrastructure and products. Crypto market maker DWF Labs establishes a $250 million liquid fund. And so this is huge. Crypto market maker and investor DWF Labs said it established a $250 million fund for its investment in mid and large cap crypto projects. Investment sizes will range from $10 million to $50 million per project, providing capital and ecosystem support according to their announcement. The firm emerged as a prolific crypto industry investor back in 2023, with much of their investments involving buying several $1 million worth of projects' native tokens. The approach, which differs from traditional venture capital model of investing in return for equity, drew some criticism from commentators. But their position as a market maker meant that they kept their tokens on exchanges, indicating a risk that they could sell at any time. Managing partner told CoinDesk back in May of 2023 that the firm kept most of their funds and investments on centralized exchanges, and that transferring tokens to an exchange does not indicate a company will sell. That's interesting. I mean, to be a market maker, you have to have your money on an exchange, right? Because you're making the market effectively. But yeah, I mean, listen, at this point, depending on what exchange you're on, obviously there is risk, but the risk diminishes significantly as time goes on, and these exchanges are able to implement, more robust security measures, and the chains allow that kind of functionality as well. So, but the bottom line here is the money is moving in. And again, going back to what we were saying at the beginning of the video, right? The Trump pump was based on speculation, right? Oh, Trump is going to do this. 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 Well, we're starting to find out what Trump is actually doing, and people are starting to, it's not aligning with what they thought or how fast they thought it was going to happen. And now poly market dispute erupts over the US Bitcoin reserve bet. And some of those involved in the poly market bet claim that the bet has already been solved, with the Bitcoin reserve executive order signed by the president. Others believe the fine print indicates otherwise. And so this is going to be the first time we see something like this, because this whole, on-chain betting on these like just random events, it's never been done before, right? It used to be just sports betting and stuff like that. And so the prediction market titled, "Will Trump Create a Bitcoin Reserve in His First 100 Days?" is marred with controversy given developments from the administration's executive order establishing an SBR. The resolution proposed was swiftly rejected, prompting a face-off between both sides of this bet. Some claim that the executive order is proof enough of this event taking place, and others claim the fine print of the bet indicates otherwise. The rules of this prediction market describe that it will resolve to yes. And by the way, this is basically how smart contracts work, right? It's either this happens and this happens, or this happens and this happens, right? I mean, obviously you could have more than two options, but either this will resolve to yes if the US government holds any amount of Bitcoin in its reserves at any point between January 20th of 2025 and April 29th of 2025. Otherwise, this market will resolve to no. Nonetheless, further explanations specify that the US government confiscating Bitcoin does not count as holding Bitcoin reserves, which was crucial for the current conflict to ensue. While some maintain that the executive order is proof enough, others declare that the Trump administration needs to purchase Bitcoin as close to 200,000 Bitcoin owned via confiscation would not count because of the rules described. Very interesting debate here. I mean, effectively, I would say this. I mean, again, I'm just basing it on what the market is called, not based on the rules of the market. But did he create a strategic Bitcoin reserve? Yes. Does that mean that the U.S. purchased Bitcoin? No. The U.S. should purchase Bitcoin. I mean, we've already heard Howard Lutnick talk about the immigration gold card, where you can spend $1 million and you can get a accelerated permanent resident card or something like that. Anyway, it's like an elevated green card. Now it's the gold card. Maybe they'll have a platinum card in the future for like $10 billion. Anyway, the point is that it sounds like they may try to use that money not just to pay down the debt, but to buy Bitcoin. I mean, because technically buying Bitcoin is also paying down the debt, just not right now. It's paying down the debt in the future. I mean, maybe that's a strategy that they do. Hey, we're gonna buy Bitcoin with these gold card purchases. We're gonna hold the Bitcoin for 5 years, or we're gonna hold it for 10 years, and in 10 years, we're gonna take the proceeds and pay off the debt. That's possible. That's possible that they're gonna do things something like that. And by the way, these kind of, maybe they don't just do it immediately. Maybe they do it in tranches where they start selling it off slowly. This could actually be really good for the market because it would indicate that there will be government buying and government selling at these random times go forward, right? So, there may be an event where they say, okay, we have this new tariff, or we have this new, thing that, we're going to take the money from it, and we're going to also buy Bitcoin and then pay something off also in the future. This is a very different method to how the US spends right now. The US spends right now and says, oh, we'll worry about it later. We'll just spend and spend and spend. By the way, they can spend because they can print money effectively, right? And but over time, as the money devalues and it becomes weaponized against other countries start to use other currencies. And we've been hearing, I mean, the whole reason Trump is talking about crypto and stable coins is because not just him, it's not a Trump thing. This is really a country thing. Congress is looking at this, both sides of the aisle, because they understand the dollar is only dominant because the dollar is dominant right now, right? That's literally the only reason. There is nothing in the world that can stop if other countries decide that they can't trust the dollar. They don't want to use the dollar, and then they de-dollarize. And so if they de-dollarize, this is catastrophic for the countries that are in the dollar. So hopefully that doesn't happen. But again, a lot of this has to do with changing the way that we think about money and how to fix situations, like Howard Lutnick discussed in this video that we played earlier about Social Security. This is the same kind of thing. Everyone says, oh, they're going to try to take away Social Security, and they use this as a talking point. It's like, well, first of all, Social Security is supposed to be just a supplement, but there's some people who need the supplement, and the people who need the supplement shouldn't have to keep getting their retirement age pushed off. I mean, I feel like when I'm older, all of the people my age are going to be working in Walmart and McDonald's and these places because they don't have enough to retire, and they won't have the supplemental income from something like Social Security, which could be life-saving for people. And once you get to that age, there's not much you can do. It's like, you can't go back and work another 40 years and invest. You have to start doing this at a younger age and investing and making sure that your portfolio is going to protect your future and your future retirement. And a lot of people don't think about this. This is why we talk about crypto. This is why we go in depth on these assets. This is why I say, guys, you have to think long term. There are some things that are trades, and there are some things that are holds, right? I mean, listen, there's people who own Bitcoin and they say, I'm never going to sell. And then an event happens in their life and they decide to sell. Maybe they want to pay off their mortgage. Maybe they want to have a wedding. Maybe, I mean, you may not agree that a wedding is a good investment, but for that person, maybe they did, right? And at the end of the day, you can't take the Bitcoin with you, right? So you have to enjoy what you have. But, in my view, there are long-term trades and there are trades, right? The long-term trades, these are only liquidated or changed or converted to cash if it's absolutely necessary, right? That is the retirement fund, right? But it's the same thing like a 401k or a retirement fund that you have. 401ks, you can't withdraw early. And if you withdraw early, you get a little bit of a penalty. But if you need that money and it's going to be life-changing for you, uh, you're going to do it, right? I know somebody who completely cleared out their uh, I think it was a 401k, maybe an IRA, one of those retirement accounts, completely cleared it out. Um, Basically took a loan out on some of it and then basically paid the tax and the penalty on the rest to pay off his house. And he said everybody that he knew told him that's crazy. And he's like, I'm looking at this as an investment, and I can take money that I'm making now, and instead of paying it towards a mortgage, I can just put it in an account and save for the long term and dollar cost average as time goes on. And that's going to make me more money than paying the interest on this house or apartment or whatever over the course of time. And I mean, to me, it made sense. Some other people, for their finances, it wouldn't make sense. But yeah, there's different ways to think about finances and how to do things with money. And that's why we're in the crypto world. I mean, there's still people who think that Bitcoin and crypto is just, some scam, internet money that has no actual value. They don't realize like what this actually means, that we have companies buying Bitcoin, countries buying Bitcoin. And it's not just Bitcoin, it's the altcoins as well, right? What we were just talking about with the outflows and inflows in the Bitcoin ETFs, same thing is happening with the Ethereum ETFs. Massive outflows. All of March, every single day has had outflows out of Ethereum. And I think this is just a little bit overblown. Remember, Ethereum and Bitcoin are the only products that have actual ETFs, right? Granted, there's some other crypto products that have other cryptos inside of them, but these are the only ones ETFs. And ETFs are direct purchase and sell from the open market, right? So it's not, um, basically, it can move the market, in my view. And we've seen massive outflows. And so the Ethereum ETF, in my view, is kind of the proxy for altcoins, right? So you have the Bitcoin ETF and everything else in the Ethereum ETF. Like it's kind of the representative for all the altcoins. And again, most of the altcoins have just not been performing. And all of March, we've had outflows out of the Ethereum ETFs. Massive FUD campaign as well. I mean, even the Solana founder, Anatoly Yakovenko, a co-founder of Solana Labs, he wrote on X the other day in response to this tweet. It says, "There's no reason to build a layer one. Layer twos can be faster, cheaper, and more secure. They aren't slowed down by being a layer one. Layer ones are over-engineered with consensus mechanisms, introducing risk vectors and high costs, paying staking rewards to validators. Ethereum's consensus is decentralized and battle-tested. Layer twos can focus on what really matters to users. For example, Eclipse Foundation, which is Solana on Ethereum, a layer two using Solana's Solana virtual machine is much faster than Solana and more secure with Ethereum underneath. Best of both worlds. Focus on what matters. Leverage Ethereum." And again, this goes back to the fundamentals, right? The fundamental question about Ethereum is, does Ethereum have value? Not just from a market cap perspective, but from a usage perspective, from a user perspective, from a large corporation integrating this into decentralized finance or traditional finance. The answer to all of these is yes. It does have fundamental value. And so the price doesn't tell us what the fundamental value is. The price may be disconnected from the fundamental value, but when it reconnects, what is going to happen to the price? This is where you see parabolic runs to the upside. Anyway, the Solana founder responded to this. And the Solana founder said, "There is no reason to build a layer two. Layer ones can be faster, cheaper, and more secure. They aren't slowed down by glacially moving layer one data availability stack or have to compromise security with complex fraud proofs and upgrade multi-signatures." Whoa, well, that shot's fired right at Ethereum from the Solana founder. Now, I mean, I'm sure that he's not like doing this as a jab. It's kind of like just a response to the fact that the other person saying layer ones are not good. Now, keep in mind, I mean, Solana, not recently, but Solana historically has not been a very reliable chain. One of the only major blockchains that has gone down literally countless times. Can't even remember how many times it went actually down for multiple hours and not just a little glitch like an entire outage of the network. Now, granted, this has not happened in quite a while since the FTX saga, and possibly FTX was crashing it. Uh, I mean, think about it, right? It's like a big joke they were playing on us, right? They created Solana for the billionaires. They kept crashing it. Everybody kept cheering it on, and it kept going down. Like, that's a joke. But anyway, listen, in my view, Ethereum layer twos and even other blockchain layer twos, they are important. They are faster, they're cheaper, they take out all the robustness because all they do is process what they need to process, those transactions, then finalize them on the main chain. That's what I guess you could call the settlement layer, right? It's the same thing like having companies processing payments and then they settle with the banks, right? So for the Solana founder to say you don't need layer twos, I mean, they don't have to think about it as of yet because Ethereum was built many years ago, many years before Solana. So the infrastructure for building the transaction throughput on Ethereum was very different than Solana. Solana can process, 4 or 5 thousand transactions per second. Ethereum cannot process that many. Bitcoin can't process that many either. And that's a critique of Ethereum, but it's really not, because Solana was built in a different day and age and was able to integrate high transaction throughput. But as time goes on, and let's say Solana does become a global leader, think about Visa Network. 20,000 transactions per second is what they process or something like that globally. And it has to be a 24-hour, 7 day a week, never down, no downtime, connectivity 100%, right? In every country around the world, and even up in the air, even in the middle of the ocean, right? These credit cards work. And so if Solana is going to translate to a global network with that kind of transaction throughput, they're going to have, hundreds of thousands of transactions per second processing. Solana cannot handle that right now either. And so what will Solana have to do? They're going to have to think about it. And instead of changing the whole blockchain, creating layer twos eliminates the need for all the technical changes. Because keep in mind, if Solana does a technical upgrade to their core code base and how their ecosystem processes transactions, every underlying asset underneath, and every product and protocol that was built on Solana has to adjust. They may have to go and change their code base. They may have to go and change their, the way that they're plugging into the blockchain. Like, this can be very cumbersome and cause a lot of issues. This is why, as time goes on, you see less and less actual changes in these networks. And this is why layer twos are important, because they allow the flexibility and the scalability. Scalability is not just transaction throughput. Scalability is also capabilities of the blockchain as time goes on and stress continues to increase. And what we've seen what we have seen, unfortunately, is most of these blockchains, they just sit by and wait until their blockchain goes down, wait until another chain comes out and has transaction throughput 10x, wait until Ethereum builds a layer 2 that can handle better like, everyone just waits, right? I said 2 years ago or 3 years ago or 4 years ago, basically, what are we in, 2025? So I said in 2020, right, and beyond, that Cardano needs USDC. I said USDC is the key. I even made a video about that. I don't know if it's still up. It should be, but if not, remind me in the comments and I'll put it back up. But it's called USDC is the key. And basically, in that video, I explained that any blockchain that doesn't have USDC, and this was last cycle, it cannot succeed. It will be impossible to succeed moving forward without USDC. And then the Cardano community says, but Cryptoviser, you're just funding all this bullshit, right? And I'm like, okay, fine. Tether. Why is Tether not integrated? Oh, well, Tether's not fully regulated. Tether, we don't even know if they have the money. I'm like, well, then why don't you have USDC? Oh, well, we have our own stablecoin that nobody's using, no transaction throughput, no stress testing, not regulated, not backed by dollars, in a bank in the United States. Like, guys, the keys to the market are here. The keys to the market are here. Layer twos are a key to the market. Interoperability is a key to the market. So just because Solana doesn't need a layer two right now, they're shutting down, or at least the founder is in this tweet, which doesn't mean Solana's not focusing at all on layer twos, but just based on this, it seems like they're not. And it seems like not only are they not, they're not planning to, because you don't need a layer two, you have the layer one. And so if you want to improve Solana, effectively what the Solana founder is saying is just build a better Solana and don't include Solana. Don't build within Solana's ecosystem. Don't try to help improve Solana. Solana doesn't need your help. Solana doesn't need improvement from a scalability perspective, because layer ones can do everything. So don't build any of that extra, infrastructure on Solana. Go build your own chain. I mean, in one hand, it's good because there's more competition. And when there is competition, it drives innovation, right? Because again, Solana forced other ecosystems. I mean, literally, Solana forced Ethereum to have efficient, well working layer twos that work just as good, if not better, than Ethereum, but are built on Ethereum. And in my view, this is why Polygon is highly, highly undervalued this cycle and probably the most undervalued coin because it is Ethereum's premier layer two, and not just Ethereum's premier layer two, but crypto's premier layer two. There is no other layer two ecosystem in crypto that has the transaction activity, the usage, the building, the integrations, the interoperability, all of the things that we need for decentralized finance to flourish as Polygon. And Polygon is $2.2 billion, lower market cap than the Trump token, lower market cap than Ondo Finance, than Internet Computer, than Aptos, the Near Protocol, than Monero, Uniswap. I mean, the market is not has not caught up to the fundamentals. That's really the point of this video, guys, right? Yeah, Trump may give us a part two to this cycle, but the cycle is going back to fundamentals. Meme coins are not fundamentals. NFTs are not fundamentals, right? Yes, the technology of NFTs can be utilized for ownership or verifiability, right? But it's not the NFT ecosystem was overhyped the same way that meme coins were overhyped. And what basically drove the market to convert from a bull market to a bear market during the 2020-2021 cycle? Well, it was over leverage and collapses from FTX, BlockFi, Celsius, and all of that. But the last kind of reach, I guess, for the altcoins in late 2021, the last reach was NFTs. A lot of ecosystems invested millions of dollars into building NFT ecosystems and all these different NFT brands and marketing, and it's all worthless now. All of it is worthless. When we go back to the fundamentals, right? The functionality, the usability, the programmability, the interoperability, the actual projects deploying on the chain, where the institutional capital is flowing, where the transaction volume is, user activity, growth of the network. This is where the fundamentals lie. And if anybody thinks that Ethereum does not have the fundamentals and that the price is not going to correct to true fundamentals of this market, I don't know what to tell you. I don't know what to tell you. I mean, true fundamentals is Solana is going lower than $100 in my view. It went to $250. All they had was meme coins. Everybody's saying, no, 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 don't sell, don't sell. It's gonna pump. It's based on what? What technology is better than the meme coins? Let me know when it's going to be released, and I will definitely invest in Solana. Nobody has been able to say that because there is nothing. There is nothing. And for a channel like mine that talks to, the people who watch my videos who are not multimillionaires, right, and are not running these large corporations, that to understand that they were buying into Solana in this meme coin craze and still believing that it's going to double from here immediately, just because we came down 50%, we're going to double from here, just because we did that. And they're not realizing, or maybe they are realizing, that the millionaires and billionaires in Solana, they're selling. They don't care that we're already down 50%. You know why? Because they bought at 25 cents. They bought at 5 cents. And so they're up thousands of percentages anyway. And you're down 50%, right? And so Solana is not the fundamentals, in my view. And the founder is basically saying it here, right? Layer ones can be faster, cheaper, and more secure. Okay, so why is Solana not faster, cheaper, and more secure? I mean, it is right now because the transaction throughput is significantly down. But anyway, I don't hate Solana. I don't get the investability at this point. And listen, people come on my channel all the time. It's a Cryptoviser. You were saying at $8 that it's going to zero, and you were wrong. Yeah, But I was also not wrong. I was correct when I said at 250 and $60 that Solana was going to drop when meme coins collapsed. And once they started collapsing, I told my viewers it was going to come down fairly substantially, and it has 50%, and probably going even lower than that. Could that be a good investment point? Absolutely. But we have to kind of monitor where the fundamentals are, because that is where I'm investing at this point in the market. And we'll see what kind of happens as we continue on in this bull market. Hopefully you guys enjoyed today's video. Give the video a thumbs up, hit that subscribe button. I'll see you when I see you. Crypto on.